Welcome back once again to Intelligent Investment Today. This is a podcast where we explore the ideas, habits, and philosophies that can help us to become better investors and perhaps even enjoy ourselves along the way. Because today, I want to talk about something that doesn't often get discussed in finance: enjoyment. And I'm not talking enjoyment in the sense of watching your portfolio go up. Everyone enjoys that. I'm talking about enjoying the actual process of investing. Reading annual reports, studying businesses, learning from history, thinking independently, making mistakes and learning from them. Because perhaps one of the strangest things in life is that many people spend decades pursuing outcomes they think will make them happy, while thoroughly disliking the process required to achieve them. And that can be a dangerous thing, not just in investing, but in almost every endeavour. Because if the only reason you're doing something is for the eventual reward, you'll probably become frustrated long before you ever get there. And besides, if the sole purpose of investing is to make money, then there are far easier ways to become miserable. So today, I want to discuss why it may be better to enjoy the process rather than obsess over the proceeds, why passion often produces better results than greed, and why perhaps the greatest investors are not people chasing riches at all, but people who simply love the game. So, let's get ready to rumble and sit back, tune in, and get ready to take on board yet another lesson in value investing as inspired by Benjamin Graham. Perhaps the easiest way to think about this is to consider hobbies. Nobody asks a keen golfer why they spend hours trudging around a field, hitting a little white ball into a hole. Nobody questions the train enthusiast who can quite happily spend a weekend photographing locomotives in the rain. And nobody asks a gardener why they devote entire afternoons to arguing about compost and pruning roses. People do these things because they enjoy them. And strangely enough, when people enjoy something, they tend to become rather good at it. Not because they set out with grand plans to become experts, but because enjoyment naturally leads to curiosity. Curiosity leads to time spent learning, and time spent learning gradually accumulates into knowledge. Investing is no different. The people who love studying businesses, who find annual reports strangely interesting, who can happily spend an entire evening reading about insurance companies without feeling they're wasting their lives. Those people can possess a tremendous advantage because they're not working. They're indulging their curiosity. This has certainly been true of Warren Buffett. By his own admission, he'd be doing much the same thing, even if he'd never become wealthy. He simply loves studying businesses. He enjoys reading. He enjoys thinking. He enjoys capital allocation. To many people, spending 6 hours reading company reports sounds about as appealing as root canal. But to Buffett, it's entertainment. And perhaps that's one reason success followed. Because he wasn't chasing money. He was pursuing something he found endlessly fascinating. Money was simply the byproduct. Benjamin Graham appeared much the same. Investing wasn't merely a profession. It was an intellectual pursuit, a puzzle, an exercise in rationality. And because they loved the process, they never really retired from it. They simply carried on doing what they enjoyed, which is actually rather nice when you think about it. Unfortunately, many people approach investing from the opposite direction. They focus entirely on the outcome. How much money can I make? How quickly can I retire? What's the next 10-bagger? How do I become rich? And there's nothing wrong with wanting financial independence. But when the outcome becomes the sole focus, investing can become exhausting. Every market decline feels personal. Every mistake feels catastrophic. Every year without spectacular returns feels like a failure. It becomes stressful. And stress rarely produces good results. Because investing is a peculiar activity. Unlike most professions, the harder you force it, the worse you often perform. The stock market has a nasty habit of humbling people who are desperate. Markets seem almost to possess a sense of humour. The more urgently you need something to happen, the less likely it is to cooperate. One of the great paradoxes of life is that people who become obsessed with money often end up making poor decisions. They become impatient, they speculate, they chase trends, they seek shortcuts, and they constantly compare themselves with others. Meanwhile, people who genuinely enjoy the process often possess a natural patience because they don't mind waiting. They're enjoying themselves anyway. To them, investing isn't merely a means to an end. It's the end itself. And that can prove to be a powerful advantage because the stock market rewards patience. And patience is much easier when you're interested rather than merely greedy. It's worth remembering too that there are countless ways to make money, but not all of them are enjoyable. Some people spend decades in careers they dislike, hoping that they'll eventually reach a destination where happiness magically begins. But happiness has an awkward tendency to refuse appointments. It keeps insisting on living in the present. Not 20 years from now, not after the promotion, not after retirement. And perhaps investing should be viewed in the same way. If reading about businesses feels like punishment, perhaps it's not the right hobby. And that's perfectly fine. There are many ways to build wealth. But if you happen to love the process itself, then you've stumbled upon something rather special. Because you're no longer trying to endure your way towards some future reward. You're simply enjoying the journey. And if good returns follow, that's wonderful. But they're no longer the sole reason for participating. This attitude also makes market downturns easier to tolerate. Because if your entire happiness depends upon your portfolio value rising every month, you're going to spend a lot of time being miserable. Markets often decline, recessions happen, mistakes happen, but if you're fascinated by businesses and investing itself, downturns become interesting rather than terrifying. You read, you learn, you study, you refine your thinking. The process continues. In other words, your satisfaction doesn't depend entirely on your scoreboard. There is another curious truth. People who enjoy what they do generally become better at it because they voluntarily put in more hours. They read more, think more, remain curious, and continuously improve. Nobody has to tell a stamp collector to study stamps. Nobody has to force birdwatchers out of bed at 6 a.m. And nobody has to persuade enthusiasts to bore dinner guests with their favourite subject. Passion creates effort naturally, and effort accumulates, which is why success often arrives indirectly. Perhaps this explains why so many successful investors appear surprisingly relaxed. Buffett still plays bridge. Charlie Munger spent his life reading widely. Peter Lynch spoke about enjoying the process of finding great companies. The point is, none of them were permanently staring at stock prices with blood pressure monitors attached. They approached investing with curiosity, And curiosity tends to be a much healthier companion than anxiety. Because nobody lies on their deathbed wishing to check their portfolio another 17 times before breakfast. As we begin to wrap things up, it's worth reflecting on what success really means. Yes, investing is about building wealth. Financial security matters. Freedom matters. Comfort matters. But if the process itself brings no satisfaction, then wealth alone becomes rather an empty prize. Because life is largely process, not destination. Most of our days are spent travelling, not arriving, and perhaps the same is true in investing. Study businesses because you enjoy understanding them. Read because you enjoy learning. Invest because you find it interesting. And if success follows, accept it gratefully, but don't make it the only reason why you participate. Because people are generally best at the things they genuinely love. And when passion and patience work together, success often appears quietly in the background, not as the objective itself, but as a natural consequence of doing something worthwhile. And on that, we bring this episode of Intelligent Investment Today to a close. I hope you've enjoyed this exploration of investing as a process rather than merely a pursuit of profits. Because while returns matter, perhaps the greatest luxury is finding something that remains endlessly fascinating long after the excitement of making money has worn off. After all, markets will rise and fall, fortunes will come and go, but a curious mind never really retires. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.